Hi everyone, Rizal from Remax All Stars here with my teammate, Jock. We are here to share some information for you, especially if you are a buyer who is currently in the market looking to buy a property. So being in the real estate industry, we see a lot of things, we deal with a lot of people, and we get a lot of questions. So for today's video, we would just like to give some information on pre-approvals for buyers, just to give you an idea of the importance of it and when you should do it. Have you ever been house hunting for months on end? It's a lot of stress running around to 5 different viewings with your agent in the evening, and then finally you discover your dream home. And without any hesitation, you desperately put in that offer. Your agent goes, presents it, and then gives you a call and to let you know that your offer was accepted. Yay, happy days.
Really happy.
Okay. Now imagine after all that excitement, you're ready to celebrate, ready to pop that bottle of champagne. You start the bond application process, and then the banks come back and tell you, unfortunately, you do not qualify for a home loan. So now you're sitting with this big disappointment. Like, you were so excited, you feel overwhelmed, you've been looking for houses for how long, you found one, and now your dream's just not coming true. So for whatever reason that is what we're here to discuss, is to avoid those disappointments. You need to be prepared. House hunting is a very stressful process, and you need to be prepared and know what you need going into this whole situation.
So you mentioned the pre-approval. What is it, and when should buyers get it?
So a pre-approval is when a lender or a financial institute determines your affordability based on your income. So it is important to note that even if you have a pre-approval, it's not guaranteed that you're going to get a bond. You can do a pre-approval, you can go through the whole process, and then they can still deny you of getting the bond. So buyers should do a pre-approval before starting to look for houses. It's important to know what you can afford, and agents also need to know this information in order to minimize your search and take you to the properties that fit in your affordability range. It also just gives an indication of what your buying power is.
So you mentioned even with a pre-approval, the lender can still deny your bond.
Yes. So as mentioned, a pre-approval is basically just an affordability check to see how much you qualify for based on your income. Once there's an offer to purchase, they can do the full-on background and credit check to make sure that you are a suitable candidate for, you're not at a high-risk profile or anything like that, because it is a risk for financial institutes to lend this money to you. Therefore, they need to do the credit checks and investigate. So they can do a pre-approval for you, but once they do the background checks and the credit checks and something comes up as a red flag, they can deny you the full home loan amounts.
So then what advice would you give to the buyers currently in the market?
So I would highly recommend that before you even start viewing any properties or seeing an agent, is to go do a pre-approval. If you don't know where to go to an agent. They can assist you. Otherwise, your bank, a bond originator, there's Uber, there's Better Bond, all of those, or private banker, just to kind of get an idea of what your affordability check is, so that you know what your buying power is. And then also, on the other hand, I would recommend, very important for you to not just do a pre-approval, but also to make sure that your credit is up to par. Like, get a credit report done, check your credit status, make sure your score is where it's supposed to be. Every bank's criteria does vary, but it usually is around 610 points, to some of them even go up to 720. But in that range, if your score is below that, the chances of you getting a home loan are also very slim. There are very strict requirements, and each bank or financial institute does have different requirements and work separately from how they will choose on who's going to be a suitable candidate to give a home loan to.
I've heard that doing credit checks affects your credit score. Is this true?
So, no, it's not true. It doesn't affect your credit score. There's nothing wrong with checking on what your credit status is looking like. Even if you're doing this through an agent who works with a bond originator or bond originator, your private banker, all of those, they can do credit checks. I mean, you can do it yourself on ClearScore or any of those apps. It doesn't affect your credit score. The only time that your credit score or record is affected is if you've already applied for a home loan. And let's say, for example, the bank only gave you 80% instead of 100%, and you go reapply like a week later to with a new offer, then it would have affected your credit score. So you can't apply for bond more than, I think, twice even, because then every time you apply with an offer to purchase, then your credit does get affected. But just checking your credit score, checking ClearScore, making sure your score is up to date, making sure that there's no judgments or accounts that are in arrears, that's not going to affect your credit score.
So what are the things that affect your credit status?
So as explained earlier, the lender or the financial institute will review various factors like your income, your credit score, your debts, and any assets that you have to determine whether you're going to be a suitable candidate. So should any of these criteria drastically change, then it will affect your credit score. So this can be anything from income loss, or increasing your debts, anything that negatively hits your credit score, which causes your credit score to lower or decrease. Then these are the things that will probably affect your credit score and therefore affect you for getting a bond. So our final advice to any house hunters out there right now, or anyone looking to buy a property in the near future, would be to maintain the status quo.
Don't tap into your savings.
Don't make extra debt for yourselves. This means don't go buy a new car, don't take out a personal loan. If you're looking to buy a house, just wait until after before you proceed with those things.
Keep putting money aside for any unexpected closing costs.
And most importantly, speak to an agent, trust your agent, and enjoy the process of finding your next home.